Bill, thanks so much for taking the time.
My pleasure. Yeah.
We're obviously here at Emergence. We're not doing too many of these shows, so
All right.
this is a pretty
I'm honored.
special occasion.
Yeah.
Obviously, you're. I was talking last night to one of my colleagues about how you're an early adopter of the show, a veteran,
Yeah.
if you will,
Been
of
on
the
a bunch
scoop.
of times.
Really appreciate it. It is surreal that we're at this point of 100,000. I mean, obviously, we've both been in this space for so long. We believed in what Bitcoin is, what crypto means for economics,
Yep.
geopolitics, just sort of buying into it at a very philosophical level. But 100,000 it still kind of weirds me out.
Yeah. I mean, the dollar hasn't stopped losing value for the 14 years-ish that Bitcoin has been in existence. The 21 million is still the cap for now and forever. So the math has not changed, you know. There's something to be said for trusting the math of exponentially growing phenomenon, right? It's very difficult for humans to accept that math because the math says Bitcoin is going to be worth 100,000 at some point, 1 million at some point, 100 million at some point, et cetera, et cetera. And like I said, human beings are we're not historically very good at accepting the reality of exponentially growing phenomenon, especially technology, right?
So well said.
Yeah.
And that's exactly what I'm experiencing. You're almost like breaking down my psychology in sort of right in front of me.
Yeah.
So as an operator, how do you then build in an exponentially growing market, right? Because we've seen the slings and arrows of previous cycles and what they've sort of, the extent to which froth breeds a lack of discipline in some respects. Because I think, to your point, people can't sort of grapple with, they think they're the smartest person in the room, and then they sort of like lose track of whatever they're building.
Sure.
So how do you maintain, I guess, a focus, like, not saying that it's going to keep going up, but if it were to continue to rip to, 150 to 200 to 250 to 1 million, how do you maintain focus in that type of...
Yeah, it's a great question. I mean, it's kind of a loaded question because I think there are so many moving parts to what goes into our ecosystem. So for example, leverage, right? Custody, trading, retail versus high net worth versus institutions, all have different requirements and different legal components to them. And as you know, the last 4-ish years in the US has really been an unmitigated disaster in terms of not even like the laws themselves, because we don't really have laws related to digital assets at the federal level, but the arbitrary and capricious application of 80-year-old or 100-year-old laws to digital assets has created just pure chaos, right? And has wasted tens of billions, millions of dollars in
Yeah, I
legal
think
fees.
the Blockchain Association actually did the math, and it came out to like $400 million
At least,
of
yeah,
value,
at least.
which seems almost...
Well, I mean, if you think about the Ripple case,
Yeah.
we're not even including the bankruptcies, right? Forget about Celsius and
Sure,
BlockFi and FTX and Voyager. I mean, that's probably hundreds of millions in legal fees. But, okay, so there's certain things that we kind of know to be true in centralized finance today, right? Certain types of derivatives for retail in the United States are just not going to happen, right? So what we would call perpetual futures, for example, there's no easy way, right, to apply existing law to make those available to consumers, right? But that also begs the question, what about decentralized finance systems that have no off switch? Who are you suing, right? So the SEC sues a Uniswap, for example. Well, are you suing the software? Because the software that's out there is smart contracts that you can't shut off. Are you suing people that implemented the software a year ago, right? So to the question of building a successful business and maintaining focus, not only do you have to have the timing right, right? Because when you're talking about exponentially growing technologies, you can look at it on a Moore's law chart and say, okay, I have it about right. But if you're off by 3 or 5 years in the big picture, that's not a big deal if you're talking about, where the world is going. But if you're building a startup, being off by 3 or 5 years is a kiss of death.
Yeah.
Right? Because you can spend a lot of money
Yeah, of course.
5 years too early. Right. And so getting that timing right, mapping it to who your core users are, understanding this hodgepodge of kind of regulation by enforcement that we've had, and we can get into how that's probably and hopefully going to change.
Well, it's sort of a big part of the Abra story. I mean, I feel like
100%. We've had to pivot unnecessarily, in my opinion, twice. Yeah.
And there was some innovative stuff. Like at the end of the day, I think if you guys had been allowed to, in like a sandbox sort of,
That's right.
we're really going back to 2018 when
our first product was a synthetic
stocks.
assets based upon Bitcoin. First, the dollar, right?
And they sort of settled in Bitcoin or
correct.
something
right,
like that.
Correct.
Yeah.
It was almost like Athena.
Yeah.
So the way Athena uses perps to basically peg the value of Bitcoin to the dollar, we created effectively a lending system that was shorting the Bitcoin to peg the value to the dollar. And that's something that Barry Silbert and I worked on, where we were actually borrowing
it was
from
super
Genesis.
cool.
Yeah, it was basically the right way to do remittances because the users held the private keys. And it was kind of like, guaranteed incentives to maintain the peg. And it worked flawlessly. Big exception, the big issue was the SEC and CFTC didn't like it.
Yeah.
And so, and again, it's one of these things where the target market was remittances, which are $200. And it's like, well, who are you regulating out of existence, right? Somebody who's trying to send $200 around where there's a full AML program in place anyway. So anyway, that was one issue. Then we tried to do the same thing for stocks outside the U.S.
Yes, that's right. Yeah.
And the SEC said, well, you have employees in the U.S. working on this. And it was just that basically they wanted it shut off. And they were looking for any excuse.
I guess like not playing devil's advocate, but I'm thinking through like what the concern might be, which is if you have markets that are like outside of like the official market for like a given U.S. equity, you can have someone sort of more easily manipulate
Oh, well,
it.
wait a minute. So you can buy CFDs on Apple shares in the UK, for example, right now.
Sure.
And the SEC doesn't regulate that because it's happening in the UK. Their take was that, and it remains, at least depending on who you talk to and how they say it, that the extraterritorial application of U.S. securities laws has no boundaries. Their jurisdiction starts at the sun and ends at Pluto in their minds. And I've more or less had people in enforcement say this to my counsel. Now, most of that's never been tested, but what they also understand better than all of us is that if the other party that you're dealing with, if you're the SEC enforcement, is a Series A startup, which is what we were at the time.
Of course.
It doesn't matter what they're saying because you're not going to fight because you can't afford to fight.
Yeah.
Right. And so they knew that. And so, okay, so that was kind of iteration number one. And, then we said, okay, we have a ton of users who, even though they're using this to do money transfer, are holding the actual Bitcoin.
Yeah.
Right. And then later Ethereum and whatnot. And so we said, okay, we'll continue to build that out. We did a couple of partnerships to be able to build that out, people with money transmission licenses and whatnot. And it was going great. And then eventually we added yield products on top of that, and the ability to lend. We had lending licenses. We had legal opinions that said these were not a security offering to do the yield products the way we were doing it. And again, the regulators, and we were very profitable. Like we were a unicorn for sure. And I know we were talking off camera about Abra not doing a lot of marketing. And even for that product, we had hundreds of thousands of users, zero marketing really at the end of the day, other than me going on podcasts like this, or, during COVID, I would go on Spaces or whatever that other room.
Clubhouse?
Yeah, Clubhouse. I was on a lot in those days. Feels like an eternity ago. But anyway, so the point being, like, it was working. And once Celsius and BlockFi and Voyager and FTX went south, the regulators were pretty incentivized from what we could tell for us to die, regardless of whether we were in a position to die.
It's amazing that you didn't get ensnarled in that whole. it was basically every single consumer
Yeah, I mean,
facing.
well, we also had better risk management, I think. You know, in hindsight, well, we're still here, first of
Yeah.
all. We had losses, which I talked about on Twitter. You can go
Yeah.
read about it. We had exposure to FTX and Genesis, and, you know, we took that on our balance sheet at Abra, which was super painful, is super painful, but that's shit happens, right? So we did it, we moved on. The retail stuff, that was painful because we had a unicorn where I had to give back $1 billion within a few weeks, over $1 billion of assets within a few weeks. And we did it. And so we retooled again, right? So we went back to the SEC this time and we came in to register and we said, okay, we've figured out how to do yield, lending, staking in a way where you can't sue us because we're going to do this as a registered investment advisor, right? And we want to be the first one that offers yield, staking, lending via a separately managed account model. In English, that means we're going to give each client their own vault, so there's no pooling of funds. Right, it's kind of like you run your own MetaMask, and then you give a row of people each using their own MetaMask. But then you say, okay, Abra, you run all of these MetaMask instances for all of these users. It's actually not MetaMask; it's an NPC wallet, but that's the basic idea. And there's no commingling of funds, right? So now, right, the 30% of users that represented 90% of the assets in our old solution can come back, because it's viable for them to use a solution like this where you're not running like omnibus accounts for users, right? Because with this solution, it doesn't work well for small dollar deployments, right? Meaning if you want to put $50 into a USDC yield product on Ethereum, it's still not going to work very well. It might work well later on Solana, which is something I think we're going to eventually offer, but right now most of the yield stuff is on Ethereum, so it doesn't work well for small dollar vaults, right? So, but it works great for high net worth investors, family offices, for a couple of reasons. One, they ask questions about how they can retain title to their assets, knowing that, you know, thousands upon thousands of people have been fighting bankruptcy courts to get their assets back when they were liabilities on somebody else's balance sheet. So they don't want to lend assets to anybody anymore, right? They want to retain title, and that's what the vault model does. That's what the SMA model does, right? They want to earn yield. They want to be able to borrow, and that's by far the most interesting thing happening right now in the Bitcoin world is how do I safely borrow against my Bitcoin? The family offices, they get all that already. Like they're there. Like we have so many clients that were already holding Bitcoin, Ethereum, Solana, whatever, and just said, look, it's just sitting there. We hate that it's just sitting there. Show us a safe yield. Show us how to borrow against the Bitcoin, you know, et cetera, et cetera. And when you can do that, and it's not this kind of lending model where you're lending your stuff to another company and you're not taking counterparty risk on Abra, then they get it. Retail users don't necessarily get that. Even today, it's more like, oh, Athena's paying 30%. How do I do it, right? and I just shake my head. I'm not saying that it's unsafe or that they're doing something bad. I'm just saying like the retail
There are
users,
other options.
They're not asking the hard questions, right? And when you ask the hard questions, right now we're winning because we have the best answers, I think, to those hard questions. And we can also do very, very large loans, right? So a lot of OGs that you've had on your show, they're borrowing using Abra. We don't disclose our clients. It's called Abra Private is the name of the service, but they are borrowing in very large sums using this model now because it's relatively safe given that they're not pooling assets and they're retaining title to the collateral. So the point being, we've basically now hopefully have rebuilt and the infrastructure for the third time to deal with regulatory headwinds.
This speaks to sort of this cost, right? It's immeasurable. And 400 million, you could argue that was the cost for Abra alone, potentially. And if you think about the
lost
value,
revenue, I mean,
the valuation or the revenue, all sort of in totality.
Yeah. Now look,
but now it's a different story.
We're going to make it. We feel really good about our position in the market, given that all of the other yield and lending, the CFI lenders are all gone, which didn't happen the way it did, but it's already done now, so it doesn't matter. And I think Abra's got real staying power. Look, I think the future of banking is DeFi based. I've said that to you before. I've said it all over the place. I still believe that's true. I think this is a detour in terms of how we get there. Outside the US, what we're doing is banking. right? Inside the US, I call it wealth management because it's regulated at the SEC level, not by the OCC. I think that should change under Trump. I think there should be an OCC or state charters, such as Speedy in Wyoming, but an OCC charter that lets me do this, right, as not only a qualified custodian, but as a lender, right, using crypto. Why not, right? So it is going to be banking in the future, and public isn't going to call it crypto or DeFi. It's just going to be banking.
Yeah.
I've got my dollars, they're a stable coin, but today they're a balance in an SQL database. In the future, they're actually going to be smart contract based stable coins. I think you're going to have stock issued on ATSs that are actually looking a lot like Coinbase in the future, right? Which trade 24/7 as opposed to the 35 hours a week that MicroStrategy and Bitcoin ETFs trade today, which makes absolutely no sense.
It's pretty absurd.
It is absurd in 2024, now 25 coming up, that that the underlying in those ETFs, right, trades 24/7, but the ETF trades 35 hours a week, right? Anyway, so that's going to be fixed. Maybe fixed outside the US first, but eventually be fixed here. So we're gearing up now, I think, to be the kind of use case, like premier, instantiation of what it means to be the bank of the future as a smart contract based, crypto based bank, not just to make Bitcoin accessible to you, but to actually use the rails correctly.
But it's such a shame that the agency didn't extend it, because it's within their power to provide third way options, sandboxes. Like, even if you think about typical security offerings, they have carved out exceptions for like Reg A plus, Reg A, for smaller raises, and so it's just a shame that crypto companies never had a way to sort of trial and error on certain sort of, because it is completely different. And
sure, but you're operating from a first principle perspective, and you have the powers that be were operating from the perspective of, my mandate is to kill this industry.
Yeah.
Right. And so obviously a sandbox is not really interesting or relevant if your mandate is to kill the industry. Your mandate is probably to beef up enforcement and ask Congress for more money to kill the grifters in crypto, as opposed to thinking about what Hester and others were talking about, which is regulatory sandboxes.
Yeah,
right?
but surely they don't think that it's sort of an irrelevant thought, but it's not irrelevant, but it's something that I probably will never get the answer to. But I'd love to know what they think of Hester. Do they just think she's a loon? Surely not.
No.
Surely not.
I don't think that Gensler necessarily thinks that everything he was saying and doing was correct.
Yeah.
I genuinely believe he had a deal to be Treasury Secretary in the second term, and it was fait complete to them that there would be a second term, and that he would get the job. And as part of, and under Warren's tutelage, who was going to support him to get the job, right? They wanted to move the banks more and more to a socialized structure, right? And securities regulation plays a part in that, with all the DEI stuff that they were doing, which was also nonsense. And killing crypto, which is the opposite of centralizing and socializing banks, it also needs to be part of that. Right. And so if you look at it from in that lens, it obviously unjustifiable in my opinion, but you understand what their strategy was, as effed up as it may have been.
Yeah, it's interesting because, if you think about Warren,
I try not to, but it's okay.
If you can stomach it, her sort of lambasting of Wells Fargo and, a lot of the stuff that Wells Fargo does. If you think about it, the aid is great, and the, opening up multiple accounts for grandmas that can't afford it and charging them all these fees. Yes, there is an element of crypto that's the Hawk Tuah coin, carnage of pump and dumps. But the essence of it is the antithesis of what Wells Fargo does.
That's right.
Because you are the bank.
The single best way to address that issue is not the CFPB fining Wells Fargo money that they're going to forget about the next day. It's competition.
Yeah.
It's more competition. It's more upstarts that are basically going to go out and market the fact that they're not going to do that, right? And we haven't had a de novo bank charter at the federal level in the United States since my .com days. to my knowledge.
Yeah, I think
It's
it was. I
insane.
think it was Capital One.
Yeah, I mean,
think.
25, 30.
Yeah,
I mean,
yeah,
it's crazy.
20, 25
You
years.
basically have to find a dead bank, buy the bank, convince the OCC, the FDIC, the Fed, whatever, that you're good actors, and it takes, 2 years to go in and do all that.
Yeah.
It's absurd, right? And so the idea of, so they're moving in the opposite direction, right? Which is centralize and socialize. And we represent the opposite of that, which is moving the pendulum back the other way, which is what the internet was supposed to represent in the first place, which was always on, no control, decentralized, global, et cetera, et cetera.
So, what do the next 6 to 12 months look like for Abra?
Well, look, I think the exciting news is that the headwinds appear to be quickly turning into tailwinds at the regulatory level. I think we are going to get our sandbox. I think we're going to get clarity at the OCC level that there's going to be a charter again. I think there's a good chance that I don't think we'll basically go back and police the past, but I think choke point will become, let's say, criminalized, so that there will be no more choke points, and then it will become, I think it'll have to transcend crypto, but opening up bank accounts or blocking bank accounts for otherwise legal businesses will become illegal, which I think technically it is now, but it will be overtly a criminal offense for the perpetrators, or I hope so. So again, OCC charter, no more choke point. So now right there, a whole bunch of VC money gets unlocked. That's it, just that. But then you add on that what's coming, which is most likely a sandbox which says, okay, if you're going to release a token, or if you're going to sell a token that has, designed utility within 24 months of the sale, you operate within a sandbox which says you don't have to basically do a traditional offering
super reasonable.
with dozens and
Super
dozens
reasonable.
of pages of documentation, which, what to your point, what Hester was proposing, clarity on decentralized versions of futures contracts, for example. So right now, the CFTC, who is likely to kind of rule over all of these utility tokens, those would be commodities which would be unregulated historically. But the question then becomes, what about futures contracts on those, right? Okay, centralized contracts, yes, the CFTC has historically regulated that. But we need clarity that if it's completely decentralized, no off switch, and you're running perpetual futures contracts on Ethereum or Solana, whatever, that those can't be regulated.
Yeah.
Right. And we need to set a clear set of guidelines that says this is what it means to be decentralized and not have an off switch. Right. And therefore not fall into the purview of the CFTC.
That's a tough question, though.
I think it's actually very clear
for regulators to wrap their head around.
Yeah, well, I think the CFTC gets it because they've been a little bit more nuanced in what they've done versus the SEC. But again, it is not, in my opinion, for regulators to be making those decisions. We have never had federal regulation when it comes to digital assets. And this is one of the first topics that needs to be addressed. And I think there's another component to it, which is developer protection, and making very clear that what happened, with developers basically being sanctioned or potentially arrested in the U.S. I realize that the arrest of Tornado Cash developers was not in the U.S., but that cannot happen here, right? And I actually believe that FinCEN was using the European counterparts as proxies to get these people arrested, knowing that they couldn't get away with it easily in the US, but could try to sanction the product itself. And fortunately, the courts recognize that, hey, this is protected free speech. You're barking up the wrong tree. But again, they're going to keep trying this if there's no recourse for, bad action. And I think we need clarity in the laws that software developers here are effectively a form of protected free speech. Decentralized systems are off limits. Utility tokens operate within a sandbox at creation. If you start doing these things, plus bank account access, and simple rules, I think a whole bunch of VC money is going to get very quickly unlocked, and stuff that's going to Singapore, Zug in Switzerland, Dubai is going to come quickly back to the U.S.
Yeah, bad news for Zug.
It's all competition to me. You know what? Thank God we have Zug, Switzerland, and Dubai, because it sends a very clear message that the water seeks its level, and if you're not going to let us do it here, they're going to go somewhere else. Just like you have
600, 700 employees of Binance in Dubai.
Yeah.
I mean, that's
Bring 'em
like,
here.
that's
Yeah.
like
Yeah,
Well, don't bring him here.
Well,
Bring,
yeah, bring them to the U.S. We have the best computer science program still in the world,
yeah.
and those people are foregoing crypto now, and that's crazy,
Yeah.
right? And so anyway, I'm very bullish. I'm very optimistic. I think we were talking earlier. David Sachs' announcement yesterday is a big deal as crypto AIs are under Trump. He totally gets it. I think a lot of what I'm saying is going to be the policy based on, the scuttlebutt and what I understand of his knowledge and what I've heard him talk about publicly.
Just what makes sense.
It's just common sense. It's not like, yeah, exactly. The czar basically is somebody who looks like a magician to a politician who hasn't studied computer science.
Yeah.
But to somebody who has studied computer science and those of us who've worked in crypto, it is common sense, the things that I'm saying.
Yeah.
It is not like, some deep, dark insight that
Yeah.
I had to have, in the middle of the night.
Well, it'll be interesting to see. But Bill, thanks so much for taking the time.
My pleasure.
And thanks for coming to the conference.
Hey, loved it. Thanks
Really
for having me.
appreciate it.
Yeah, Prague's a cool city.
It's so fun.
Yeah.